Good afternoon, everyone. So now we're going to be looking at Rsk4805, which looks at market risk. So initially, when we prepared the schedule, we were under the impression that the registration should end 28th of February, so that beginning of March, we should be starting with our classes. But the new developments is that they've extended the date until the end of March to complete the registration at UNISA as well. So because of this, we see that we have not yet been able to, there are so many other students who have not been able to complete their registration at UNISA, which means that we have to try to accommodate those students as well. So the agenda for the class today is an induction class where we tell you exactly what to expect when it comes to the study units, what to expect when it comes to the module, and also how to access the material that you need as well between now until you write your exams in January, February next year. So on our side, when it comes to our schedule, between now, today, it's going to be an induction class. Then the next class that we're going to be having in March, we're going to be looking at study unit 1, which is based on topic 1 of the curriculum as well. So you see that your curriculum is made up of 3 topics. And within those 3 topics, there are 9 study units that we need to go through. Now, within those 9 study units that we need to go through, some study units will be having their own chapters, single chapters, and some study units will be having a couple of chapters that needs to be covered as well. But you'll see that when I give you the breakdown of what to expect when it comes to the study units that we need to cover for this particular module as well. So you will see that between now until end of October, we should be able to finish the 9 study units that are expected for us to cover when it comes to market risk, which is Rsk4805. So between now until end of October, we should be done. That's why you see that even on our timetable that we've posted on our website, it's giving you the timetables of the classes between now until end of October, because that's when we should be done with the study units. Then November, December, January, until you write in February, we dedicate that time specifically for revision. So during the revision period, we review the current year's question papers, we review last year's question papers, and then we will also review the current year's assignments, questions that we also see deemed to be important as well. So you will also see that on our database during the revision period, because the curriculum changed around 2020 for the exams to be written in 2021, thereabout, but I will tell you exactly the correct information there. You will see that for the students in the you will see that during the 2020 period, we specifically, because there was no past papers which were relevant because the textbook changed, you will see that for 2020 period, we have practice questions that we compiled, and then those practice questions, we also compiled the answers to the practice questions, and we also compiled the videos going through those practice questions as well. And the practice questions were picked up from questions at the back of each chapter in your textbook. So we picked specific questions at the back of the chapter in the textbook, and from those, we compiled practice questions as well. So that's basically what we used when we prepared for the questions, prepared for the first group that was doing, that was in the 2020, that is basically the 2020 group as well. Then the 2021 group and 2022 group, because they already had question papers that were done for that particular period as well, it basically means that we now are going to go back to the question papers as well. So you'll see that there are practice questions, and there's already videos of the question papers that are relevant for you guys. That is the question papers for 2021, the question papers for 2022, the question papers for May, June, and January and February. You see that there's videos going through those question papers in class as well. There is also question papers and answers as well to those past question papers. And remember, we're going to be using that material during the revision period. And during the session today, I'll also guide you to see exactly how do we access that material when we access the material online as well. Now, please note that between now until end of October as well, we are also going to be going through assignments. So there's also assignments that we're expected to go through when it comes to this module as well. So those assignments with short questions, I'll compile the answers, and I'll also reference the page where I'm getting the answer from in the textbook. So for those answers where there's just short questions, I'll compile the answers, and on my memo, I'll also make reference to where I'm getting the answers from. Because sometimes they'll ask you a true or false question. They'll ask you for a particular figure, a particular answer as well, to say, what is the, how to complete this particular sentence and so on. So those are some of the assignments that you should expect to encounter. For those particular assignments, I'll prepare a memo, and based on that memo, I'll indicate to you exactly what the answer is, and I'll also give you a reference of exactly where you get the answers in the textbook. Then those questions which are structured, which is basically longer questions as well, where sometimes they'll give you a question from a certain information, then they ask you to do calculations, or they ask you to do a couple of things as well. Those type of questions or those type of assignments, we'll go through them together in class so that I can be able to comprehensively tell you exactly what the answers are. So how we are going to approach assignments is that usually those assignments where with short questions, like for example, true or false, or you're simply just asking to get an answer as well, right? What we're going to do is that before you attempt the assignments as well, I'll guide you on exactly how to extract the information and how I'll be able to prepare or compile the template for the answers that you're going to be getting as well. Then there are those structured assignments where the questions are the same for everyone, and they're asking you to or expecting you to answer those questions, which are basically the way the questions are the same for everyone. And usually those are the longer type of questions as well, with a bigger mark allocation. When it comes to those particular assignments, what I'll do is that we'll go through those questions together in class so that you can be able to see exactly how to attempt such questions as well. So that's basically how we're going to go through the assignments. So you see that I think it's about 5 assignments that you should be expecting for Rsk4805. And from those 5 assignments, every time there's an assignment that is due, I will tell you exactly how we're going to be approaching such assignments as well. Now, looking at what we're going to be expecting to cover in the text when it comes to the material in the textbook, remember I said that there are 3 topics, and from those 3 topics, you will see that we're going to be looking at 9 study units. And from those 9 study units, there are different chapters that we're expected to cover for each study unit as well. So when you look at topic 1, topic 1 is basically where you're looking, it's basically the introduction to market risk as well. So it's basically the basic introduction to market risk, and there are basic chapters that are expected to know from that introduction to market risk as well. So you will see that for topic 1, learning unit 1 looks at, so here they say topic 1 covers learning units 1 to 3 and introduces market risk management, including sources and challenges of market risk management, concepts relating to risk and return, which are going to be covered in learning unit 1, which is study unit 1, overview of financial services industry, which is going to be covered in learning unit 2, then the regulatory requirements for market risk management, which is covered in learning unit 3. Now, which means that for learning unit 1, they refer us to chapter 1 of the textbook. And when you look at chapter 1 of the textbook there, it's basically a basic introduction. So you will see that for chapter 1 of the textbook, when it comes to the exam, expect questions which are theory questions. So please take note, when it comes to the exam, your exam is going to be a mixture of different things. There's going to be theory questions that you should expect in the exam. Then there's also going to be calculation type of questions that you're also going to be expecting to be asked in the exam as well. When it comes to approaching questions which are theory questions, since your exam is an online exam, during the revision period, I'll guide you on exactly how to use shortcuts to answer or to get an answer for a theory question that is asked when you look at the exam as well. So we'll cover that when you look at during the revision period. I always make sure that I give you that information as well. Then when it comes to the calculation type of questions as well, for learning unit 1, it's mostly introducing you to the concept of what? Risk and return as well. How do you calculate the risk or the expected return? And how do you calculate what? The standard deviation as well. So that's basically what you're going to be looking at in learning, in study unit 1, which is learning unit 1. Then when it comes to learning unit 2, when it comes to learning unit 2, learning unit 2, they refer us to chapters 2 to 4 of the prescribed textbook. So they refer us to chapters 2 to 4 of the prescribed textbook. And if you look at chapters 2 to 4 of the prescribed textbook, chapter 2 looks at banks, right? So now remember, we've looked at learning unit 1, where we look at the risk and return relationships. Now, when it comes to banks, we also need to find out exactly, so how do banks work, and exactly what are the mechanics that are involved when it comes to what the banking, the way of how the banks works as well, so that you're able to identify the risk that also emanates from the day-to-day activities of the bank as well. So that's basically what is covered in chapter 2. Chapter 3 looks at insurance companies and pension plans. So chapter 3 gives us another breakdown of another type of other types of institutions, which is insurance companies and pension plans, for us to be able to understand exactly, so how do insurance companies and how do pension plans work, and how do you also identify the risk that is what emanating from the operations of what of the insurance companies and pension plans as well. Then chapter 4 looks at mutual funds. Mutual funds, from a South African perspective, we refer to them as unit trust. Like, for example, when you look at unit trust investments from the different investment houses, like, for example, you look at Stanley, you look at Alan Gray, you look at all these other investment houses as well. Those are some of the investment houses that offer what? Unit trust investment. So which means that when we talk about mutual funds, because this book is an American-based book as well, you will see that whenever they refer to mutual funds, for us, it's basically the same as what? Unit trust investments as well. So that's what we're going to be looking at. Then we also look at exchange traded funds, which is the ETFs. And we also look at hedge funds, and we'll see exactly, so how do they work, and what are the advantages and disadvantages of what choosing any of these type of investment vehicles as well. So that's basically what is covered in chapters 2, 3, and 4 of the textbook. And remember, chapters 2, 3, and 4 of the textbook is basically what is covered in learning unit 2. So please note as well that as you are going through the textbook, always refer back to your study guide, because your study guide will tell you exactly, for this learning unit, please go through these chapters in the textbook. And you also see later on that even some of the chapters as well, it's not everything you're expected to cover in a particular chapter. There are certain sections that they leave out for Rsk4805 because they say it's not relevant for our curriculum. So because of this, please make sure that when you go through the textbook, make sure that you're always referring back to the study guide, because the study guide will tell you exactly what you need to cover and what you don't need to cover in the textbook as well, so that you don't end up wasting a lot of time going through material which is not necessarily relevant for you to be able to know when it comes to preparing your exams as well. Then after learning unit 2, we look at learning unit 3. And remember, learning unit 3 is still part of topic 1, right? Now, learning unit 3, they ask us to look at chapters 15, 16, and 18 as well. So you see that, yeah, I'm using the older version there, but you see that on what is expected to come for us to cover there, we are expected to look at chapter 15 of the textbook. Then they also expect us to look at chapter 16 of the textbook. And then they also expect us to look at chapter 18 of the textbook. as well. So they expected to look at chapters 15, chapter 16, and chapter 18 of the textbook. So these are the chapters that we're expected to cover under Learning Unit 3. So if you look at Learning Unit 3 there, when you look at chapter 15, 16, and 18 of the textbook, you see that Learning Unit 15 looks at, so Learning Unit 15 looks at bank regulation. So Learning Unit 15 looks at bank regulation. It's mostly bank regulation, although in a short way, they also give you a brief background, which looks at regulation of insurance companies as well, which looks at solvency. But Learning Unit 15 looks at, mainly it looks at what? Bank regulation. And when you look at bank regulation, Learning Unit 15 is just showing us a background of how the Basel Accords have evolved. So when you look at the Basel Accords, remember we're saying that in this case, we're looking at regulation of banks. So when you look at the regulation of banks, we see that how banks work. The balance sheet of the bank basically says your assets is equal to equity plus liabilities, right? So your equity is the contributors, is what has been contributed by the owners of the bank, right? Which is basically your ordinary shares and also any reserves that you might also have as well, right? And then your liabilities would be made up of any borrowings, any loans to the bank, and then which is basically, I would say, it's any debt financing to the bank, the different layers of the debt financing to the bank. But specifically, we also look at money that has been contributed by the what? By the depositors as well. So when you look at the Basel Accords, we're basically saying that the main thing there is that we are trying to ensure that there's confidence in the economic system of a country. Especially when it comes to the financial system, right? And one way of ensuring confidence in the financial system is to ensure that if it comes to the banks, the money contributed by the depositors is also safe. Because you don't want a situation where the depositors, they put money in their bank, and then the next thing, they end up losing money on their bank, like what we saw with what happened with the VBS Bank as a typical example as well. Now, because of this, it means that if this is basically how the bank is financed, and we are mostly worried about what is going to happen, not all, but our main worry is here, although we are also worried about the bank meeting's other obligations as well. But this is basically our main worry, because remember, this is people who have no knowledge on investments. The only thing that they know is that I put money in the bank. If I deposit 3,000 in my bank account, I want to be able to withdraw that 3,000 after whatever period of time. But we know that the bank takes that money, right? So what does the bank do when they take that money? Remember, they invest it in securities. What else do? They give out loans to the other customers, like for example, for e.g., mortgage loans, where if you want to buy a house and then the bank will say, we'll give you a loan and you pay it back over a period of what? Of let's say 20 years as well. So this is part of the income generating activities of the bank. So to generate income, this is basically how the bank is going to, these are some of the activities that the bank is going to be pursuing to generate an income for the bank, right? So in pursuant of this return, what do we see? In pursuant of these returns, there is risk involved. And there is risk involved. Why? Because we are pursuing what? Returns. So in pursuing returns to the bank, there is also going to be risk that's also going to be involved as well. So the risk is that whatever we invest in we end up losing money. So if we lose money, how do we ensure that these ones don't end up losing their money as well, especially the depositors? So that especially the depositors, because depositors lose their money, there's going to be loss of confidence within the financial system of the economy as well. So to do that, we need to make sure that there is enough money from here so that this money is going to be enough to absorb. We need this money to absorb the losses. So we need money here that is enough to absorb the losses. So the Basel Accord now is trying to do a calculation to say, so how much is the value of this money that is needed to absorb the losses? And this is when we calculate what? The capital requirement. So the reason why we calculate the capital requirement in this case is mainly because we're saying how much capital do we need to ensure that in case of losses here, there's enough money to absorb these losses and then it doesn't spill over to here. So we need to make sure that there's enough capital as well. Because remember, the moment this capital is eroded, what is going to happen? The bank is going to be forced to liquidate, isn't it? And at the same time, the depositors are going to lose their money because there's not enough money to absorb these losses. And what is going to happen as well? There's going to be loss of confidence within the economic system as well. So which means that when you look at the workings of the bank, I'm explaining it in detail, mainly because this is basically the basic issue that is basically being addressed when you look at the Basel Accords as well. So that's basically what it looks at. But now we're going to be looking at the evolution of the Basel Accords from the period that it was introduced until now as well. So that's basically what we're looking at. So from 1988 until now, we're basically looking at the evolution of the Basel Accords. That's basically what we're going to be covering in chapter 15. Then solvency solvency 2 basically looks at regulation of insurance companies as well, but they don't really give us that much information, which means that if it comes in the exam, it's probably would be a theory question. Then chapter 16 goes further to look at the evolution of the Basel Accord, where you look at Basel 2.5, Basel 3, and also an analysis of what post-crisis changes as well. When it comes to when you look at post-crisis changes, we're looking at what changes have been implemented since 2008 financial crisis as well. So that's basically what is covered in chapter 16. Then chapter 18, we don't do chapter 17. Chapter 18 looks at the fundamental review of the trading book to say exactly, so what is involved with what do we refer to as the trading book? What do we refer to as the banking book as well? And what are the fundamentals that are involved when it comes to the trading book as well? And remember, the main idea here is basically, we are basically saying that over the years, the lack of regulation and monitoring and review of the trading activities has resulted in what many banks suffering financial losses, especially when it comes to the issue of what rogue traders as well. Like what we saw, if you look at one of the case studies that is covered in study unit 1, where you look at Barings Bank as well, with the case of Nick Leeson as well, you see that this is basically why we need to look at the fundamental review of the trading, because the trading book is very, very important, because if we don't monitor and review the activities of the trading activities of the traders as well, it basically means that you might end up having what huge losses that the bank is going to be suffering as well. That's why you see that when we look at this particular chapter as well, we're going to be looking at the separation between the front office, the middle office, and the back office. And the lecturer allows to ask questions in the exam and also in assignments regarding what is the front office, what is the back office, and what is the middle office as well. So that's basically what is covered in learning unit 3. Are there any questions so far? So after topic 1, we now move on to topic 2. And topic 2 looks at managing market risk. And in managing market risk, they say topic 2 covers learning units 4, 5, and 6. So topic 2 covers learning units 4, 5, and 6. And learning unit 4 looks at trading in financial markets. And when it comes to learning unit 4, they refer us to chapter 5. So when it comes to learning unit 4, they refer us to chapter 5. And if you look at chapter 5 there, we look at the trading, we're looking at the trading activities and how do you do the calculation and management of the different trading activities that the bank is going to be involved in as well. So we're going to be looking at the different instruments or different derivative instruments that are used in the trading activities. Like, for example, you look at forward contracts, futures contracts, swaps, and options as well. So those are some of the main derivative contracts that we're going to be looking at. So we're going to be looking at pricing of these derivatives as well to see exactly how do you determine whether you're making a loss or you're making a profit as well. So that's the main thing that we're going to be looking at when you look at what? Chapter 5. The main thing there is basically the different derivatives that we're going to be looking at and seeing exactly how do we price the different derivatives and how do you determine whether you're making a gain or you're making a loss from these different derivatives as well. So that's basically what is covered in learning unit 4, which looks at chapter 5 of the textbook. Then when you look at learning unit 5, learning unit 5, they refer us to chapters 8 and 9. And learning unit 5 looks at interest rate exposure. So learning unit 5, they refer us to chapters 8 and 9, where we look at interest rate exposure as well. So when you look at chapter 8, chapter 8 takes us to how traders manage their risks. In chapter 8, we look at the workings of delta, and we look at the workings of gamma, which are the Greek letters as well, and the Greek measurement of risk as well. And then we look at the vega, we look at the theta, and we also look at the rho as well. And we see exactly how their combined effects also affects the effect on the change in the value of the portfolio, and how they also end up affecting what the overall portfolio of this way, and how do they interact between each other as well when you're looking at what the effect on the change in the value of the portfolio as well. Then we also look at scenario analysis as well, finding out exactly as we make projections of exactly how the portfolio is going to be affected as well, going to the future as well. How do we use the different scenarios as well to make projections of exactly what we can expect to happen with the change in the value of the portfolio as we go forward as well. So that's basically what chapter 8 covers. And you see that chapter 9 is very much related to chapter 8 as well, because chapter 9 now looks at what interest rate risk as well, and find out exactly, so how do we measure the interest risk from the different models that are used to measure interest rate risk as well. So you will see that we need to find out exactly if it's a bond portfolio, how do we measure interest rate risk using duration and convexity as well. So that's basically some of the ways that are going to be looking at when it comes to what measuring interest rate risk. Then we also look at measuring interest rate risk when you look at the effect of gamma and vega. And we also look at another method that is used in measuring the change in the value of the portfolio when it comes to changes, movements in interest rate as well, which looks at the principal components analysis as well. So it's basically looking at measurement of interest rate risk. But remember, take note that chapter 8 and chapter 9, they do link somehow, but I'll also explain exactly how they link when we look at chapters 8 and chapter 9 of the textbook as well. So remember, we said learning unit 5 looks at chapters 8 and chapter 9 of the textbook. So please make sure that you take note of that. And remember what I told you as well, that don't go through the textbook without always referring to your study guide, because the study guide will always give you a guideline of exactly what should you expect from a particular learning unit as well? What are you expected to cover in a particular learning unit as well? Now, remember we said topic 2 covers learning unit 4, 5, and 6 as well. So for learning unit 6, we look at they ask us to look at chapters 10 and 11. So they ask us to look at chapter 10 and 11 of the textbook. And you see that chapters 10 and 11, they are very much linked as well. And chapter 10 looks at volatility to say, how do you determine or how do you calculate the volatility of your portfolio? But remember, your volatility is basically your standard deviation. So now we need to see exactly, so how do you determine the volatility of your portfolio? And it's going to be slightly different from what you're familiar with as well, because remember, when you're doing your undergrad, we did look at measuring volatility, but when we looked at measuring volatility there, we looked at measuring volatility as a percentage. But now we need to find out exactly how do you measure volatility in currency form? Like, for example, how do you measure volatility in rand? And how do you measure volatility in what, for example, in dollars as well? So that's basically the main thing that you need to take note of, that we're going to be looking at what chapter 10, which looks at measurement of volatility. So there are two main models which are used in measuring volatility. The first one is called the exponentially weighted moving average model. So the first one, we refer to it as the exponentially weighted moving average model. And the second one, we refer to it as the Gach 1.1 model as well. So these are the two models that we're going to be looking at when you look at measuring volatility. And please take note there that these two, they are highly examinable. You are expecting to see them in assignments, and you are also equally expecting to see them when we go through the exams as well. It's either one of the two is going to be coming, or all of them are going to be coming, but they are also highly examinable concepts as well. So when you cover these, please make sure that you're able to take note of exactly what is expected for you to cover there as well. Then from there, for chapter 11 looks at correlations and copulars as well. So chapter 11 looks at correlations and copulars. Now, the main thing that you need to take note of from chapter 11 is that we said the covariance of asset A and B is given as the correlation coefficient of asset A and B multiplied by the standard deviation of asset A multiplied by the standard deviation of asset B. So that's basically how we measure the correlation coefficient. So for chapter 11, remember we said here, we're measuring volatility, which is basically your standard deviation, isn't it? Now we are saying, so given that the covariance, so given that over time, the covariance can change, and also given that over time, the standard deviation of the different assets as well can also change, how do we assess or measure the new correlation coefficient between the assets, given that the correlation coefficient is going to change over time, given that the standard deviation of the two assets are also going to be changing over time as well? So that's basically what we're going to be covering in chapter 11. So that's why I say chapter 10 and chapter 11, they're very much related to each other. And you see that when you look at the exponential weighted average movement method and the Gach model as well, we are also going to be using them when we look at chapter 11 of the textbook. So that's what, so you need to make sure that make sure that you understand chapter 10. Because if you don't understand chapter 10 and you get lost in chapter 10, it means chapter 11, you're going to find it very difficult as well. So please make sure that you take note of that. If you don't understand chapter 10, chapter 11 is also going to be difficult for you as well. So please make sure you take note of that. Then from there, so after learning unit 6, we also now move on to learning unit 7. And learning unit 7 falls part of topic 3 of the textbook. And topic 3 looks at measurement of market risk. So topic 3 looks at measurement of market risk. Can you give me a second? I just want to reconfigure my things because the electricity has come back just now. All right, can we continue? The next learning unit we're going to be looking at is is topic 3, and topic 3 is where we'll need to go through learning unit 7, 8, and 9. So for topic 3, they ask us to look at learning unit 7, 8, and 9. And for learning unit 7, we look at the concept of value at risk. So, one of the concepts that we use in measuring risk as well is where we look at the concept of what? Value at risk. And when it comes to the concept of value at risk, they refer us to chapters 12 to 14 of the prescribed book. So they refer us to chapters 12 to 14 of the prescribed book. And when you look at chapters 12 of the prescribed book, we look at the concept of value at risk and expected shortfall. We're going to be looking at the definition of what value at risk is. We're going to be looking at the advantages and disadvantages of using the value at risk concept. Then we're also going to be looking at the concept of expected shortfall. And then we're also going to be looking to see exactly, so what are the advantages of expected shortfall that it has over another valuation method, which is the value at risk as well. So that's basically what we're going to be looking at when it comes to chapter 12 of the textbook. Then chapter 13 of the textbook looks at historical simulation and extreme value theory. So for chapter 13, please note that for chapter 13, we are only expected to cover 13.1 and 13.2 only. So if you check in your study guide there, you will see that in your study guide, they say for chapter 12, we need to go through everything. Then for chapter 12, they ask us to go through everything. Then they also say, leave out the following sections for chapter 12 as well. 12.5.1, 12.7, 12.8, and 12.10.1. You need to leave them out when it comes to chapter 12. Then when it comes to chapter 13, they say go through 13.1 and 13.2, then read sections 13.3 to 13.6. You will not be tested on these sections. So don't expect them to be coming in the exam. So that's why we're not going to look at 13.3 to 13.6 as well. So chapter 13, remember we said chapter 13 there looks at historical simulation and extreme value theory, where we're now going to say, how do we look at measuring the accuracy of the value at risk? How do we look at the measuring the accuracy of the expected shortfall? And how do we look at the stressed value at risk, and how is the relevance of the stressed value at risk concept, and how is the relevance of what is the relevance of the stressed expected shortfall concept as well? And remember, we're going to be looking at that in chapter 13 of the textbook as well. Then after chapter 13 of the textbook, remember the other chapter we're expected to cover under this as well is chapter 14. So when you look at chapter 14 of the textbook, they are expecting us to look at so for chapter 14 of the textbook, they are expecting us to look at the model building approach. So they are asking us to look at the model building approach. And when you look at the model building approach, we're now looking at the case of a two asset case as well, to say, when you look at a two asset portfolio, how do you determine the standard deviation of the first asset? And how do you determine the standard deviation of the second asset? And how do you determine the standard deviation of the combined asset as well? And the main thing there being, for chapter 14, we need to see exactly, is there any advantage of us measuring the risk of these single assets on their own compared to measuring the risk of these assets in a combined portfolio? So you will see that under normal circumstances, the sum of the risk of these two assets on their own compared to the risk of the asset that is going to be a combined portfolio as well, you see that the risk of the asset that is combined portfolio is going to be less than the risk of the assets which are going to be standing on their own, because of the issue of what? Correlation between the assets. So which means the lower the correlation between the assets, the lower the standard deviation of the overall portfolio. So now we need to find out exactly, so what is the diversification benefits for us to have a portfolio with what? Two or more assets in that portfolio as well. So that's basically what we're going to be looking at when you look at chapter 14. Then we also refer back to the exponential weighted moving average method. We also look at principal components analysis as well. And then as a theory question as well, or potential theory question, they can also ask us about the multiple vertices approach as well. And these are some of the models that are also going to be looking at or used, and some of the concepts that are also going to be asked as well when it comes to chapter 14 of the textbook. So for chapter 14 of the textbook, you will see that for chapter 14, we are normally, for chapter 14, we would be, I can say we are expected to cover everything that is going to be expected to be covered in chapter 14. If there's something that's not expected to be covered, I'll also highlight it to you there when we cover chapter 14 of the textbook. Then from there, from topic 8, so from topic 3 as well, we need to look at learning unit 8 of the textbook. And learning unit 8, they ask us to go through chapters 7 and 22 of the prescribed textbook. So when you look at chapter 7 of the prescribed textbook there, you will see that chapter 7 looks at valuation and evaluation and scenario analysis, the risk neutral and real world as well. So the main thing that you need to look at there, you are not going to be looking to say exactly, so how do you look at the value of a security, especially when it comes to options, to see exactly, so what would be the value of your security there in a risk neutral world, and what is the value of your security there in a risk-free world? Because remember, in a in a real world, right? So the risk neutral world is basically the risk-free world, where we are saying that you borrow and invest at the risk-free rate. So in a risk neutral world, we're basically saying that you are borrowing and investing at the risk-free rate. But in the real world, we know that the rate at which you are going to be borrowing and the rate that you're going to be earning from a particular investment as well are going to be are likely or are most likely going to be different. And if they are going to be different as well, how do we now look at the valuation of the different derivative instruments, especially when it comes to options as well, when it comes to comparison between the real world and the risk-free world? So that's basically what we're going to be looking at in chapter 7 as well, and see exactly, so how does the real world and the risk-free world basically differ as well. Then chapter 22, we are going to be looking at scenario analysis. So you see that from chapter 22 of the textbook, chapter 22 of the textbook, they ask us to look at scenario analysis and stress testing there. And please take note that from chapter 22 of the textbook is just a lot of theory that you need to know to say, so what is scenario analysis, and what are the different methods that are used in compiling a scenario analysis for a particular organization as well. And remember, when you look at scenario analysis, you're trying to make projections in the future to say, what are the likely outcomes going to the future? And what are the risk factors that are going to be affecting those outcomes as well going into the future as well? So that's basically what you're going to be looking at when you look at chapter 22 as well. It's mostly scenario analysis. And because it's scenario analysis, you see that it's just going to be a lot of theory that you are expected to cover, which means that even when you do the exam as well, the type of questions that you should expect to encounter from chapter 22 would be theory type of questions as well. Then after chapter 22, from topic 3, the last chapter of the curriculum that we're expected to cover from topic 3 looks at mistakes to avoid, which is coming from chapter 29. And you see that even chapter 29 as well, it's just a lot of theory that we're expected to cover. That's why you see that chapter 22 and chapter 29, usually we need about an hour to an hour and a half to cover those, to cover each of those chapters as well, because it's just a lot of theory that we need to make sure that we highlight. And remember, going into the exam, when we go through the revision period as well, I will give you a guideline on exactly how do you now use shortcuts to answer theory questions. So chapter 22 and 29, we are going to go through them, but don't worry much, because since there's going to be a lot of theory coming from there, you will see that I'll also show you exactly what are the different shortcuts that you can also utilize for you to be able to answer theory questions in the exam, since your exam is going to be an online exam as well. So these are the 9 study units that we're expected to cover when it comes to market risk, which is Rsk4805. Are there any questions on what we're expected to cover from market risk? Any questions?
From my side, I think so far how you've kind of broken it down really helps. I guess as we journey into this then and immerse ourselves into the theory, would be able to have like specific questions, right? So I'll be honest, at this particular point, I just need to get the textbook. I haven't really started. Once I've also started, and then, you know, as we go through how you've breaking everything down, then I think I'll be able to have specific content related questions. But
All
so
right,
far,
no, it's fine.
yeah.
Okay. Before I forget, there's something else I wanted to discuss regarding the curriculum. It's the calculator. It's the calculator. Very, very important. Please note, preferably use a scientific calculator or any other calculators where you are able to use to see that you've opened the bracket, you've put a plus sign, you've put a value, and you're closing the bracket there as well. Reason being, from the time that I started tutoring around 2010 as well, over these years, one of the common problems that I found with many students is the issue of BODMAS. Many students, even at this stage, they struggle with the concept of BODMAS. So you find that when you use a calculator where you're able to open and close brackets, where you're able to put the plus sign and the multiplication sign as well, you will see that the calculator will remember and implement the concept of BODMAS for you. So because of that, it also means that make sure that when you're entering the values, where there's a plus sign, put a plus sign. Where there's a minus sign, put a minus sign. Where there's a bracket, put a bracket as well. Because automatically, if you do that, the calculator will remember the concept of BODMAS for you, and it makes your life easier. Because remember, many students, especially Rsk4805, they struggle a lot when it comes to using the calculator. So you might find that they would be familiar knowing exactly, okay, when it comes to a question like this, I'm supposed to use this formula. When it comes to a question like this, they will be knowing exactly which formula to use. But where they will struggle and get the answer wrong is when it comes to the use of the calculator, which also means avoid changing calculators as we are approaching the exam dates. Because if you start changing calculators as you approach the exam dates, remember, these calculators, they have different ways that they also work as well. So because they have different ways that they also work as well, I would strongly advise you to avoid changing calculators as we approach the exam dates. Rather, get a calculator now that you know that you're going to be using between now until you write your exam. Because if you do that, you will see that you are now you'll be over the year, you'll be becoming more and more familiar with your calculator. And the more familiar you become with your calculator, the less mistakes you make. The unfortunate thing about Rsk4805 is that you will see when you start doing revision, sometimes they ask you to do a long calculation, but when you look at the mark allocation, it can be 2 marks, it can be 4 marks. If you're lucky, it can be 5 marks. But the amount of calculation that you're expected to do is quite a lot. It's quite a lot. The amount of potholes that are put in that calculation for you to make mistakes as well are quite a lot as well, which means that you are likely to make mistakes and not get the final answer as well. And remember, because it's a very limited mark allocation for a lot of calculation that is involved as well, always make sure that you avoid making mistakes. And how do you avoid making mistakes? By mastering your calculator from now until you write your exam. Many students have struggled with this module, not necessarily because they don't know exactly what they're doing. They know the different concepts, they know the different formulas. By then, by the time you're writing the exam, you will be knowing exactly which formulas you're supposed to use, because we always emphasize and hammer on those concepts that we know they're common concepts as well. But where most students struggle when it comes to getting the answers right, it's mostly the use of your calculator. Even before the curriculum changed, when I still remember the previous curriculum as well over the previous years, it was even worse because it was just derivatives and it was heavy in calculations as well. So remember, your exam is the big chunk of your questions, it's calculations. Then here and there, they will bring you theory questions as well, but a big chunk of your calculations, of your questions there, it's it's calculations. And remember, the theory question that they'll bring you, it's usually 2 marks, 3 marks, 2 marks, 3 marks. So they bring you theory questions here and there, and it's 2 marks, 3 marks. So it's short, but at the end of the day, calculations are the ones that are carrying the bigger weight. And if you make a mistake, it means that your overall answer is also going to be wrong as well. So please make sure that so what we'll do is that as we are going through the different calculations, I know by head and I can visualize a lot of these calculators that are usually used or that are commonly used as well. If it's not a calculator that is commonly used, I'll also ask you to take a picture and send it to me on WhatsApp so that I can have a look at it. Because that way I'll be able to guide you to say, for this calculator, this is how you are going to be able to get to the answer as well. And this is where the function that you're looking for should be. So please familiarize yourself with your calculator. Very, very important. Are there any other questions? All right. Now, the next part of our induction class today, I'm going to show you how to access your material on our website as well, which is basically the last part of our class. So the next part of our class, in this case, I'm going to be showing you how to access your material on the website as well. So to access your material on the website, I'll give you the link to the website if you don't have it as yet. So you click on student login, and when you click on student login, you will see that if you don't have a user account as yet, so what I'm going to do is, for the month of March, we give our students access, free access to our website as well. So over and above the free online classes that we give you, we also give you free access to our website. But remember, when it comes to the access to our website as well, we limit the amount of material that you're going to be able to access as well. So we give you free access until the 31st of March. So between now until the 31st of March, please ensure that you're able to register officially with us as well, because I will need to send you a registration form. If you don't register through the registration form, you can also register online on our website as well. So which means you can also be able to register online on our website so that you're able to register officially with us. Once you're registered officially with us, it basically means that we are from the trial class group, WhatsApp group that you are going to be in, we're going to be putting you in the official group for our classes as well, because in the official group, this is the group where when after the 31st of March, if there's going to be any more classes that are going to be happening as well, we'll be sharing information regarding the meeting ID and the password, which is because there's the meeting ID and the password, they constantly change from one class to another as well. And because of that, it basically means that we'll be sharing it with students who have been officially registered. So please make sure that even though we are going to be able to give you free access between now until the 31st of March, please make sure that before the 31st of March, you are able to officially register so that you're able to continue accessing the material after the 31st of March as well. So for us to be able to give you access to our material for now until the 31st of March, if you go on the website, you need to indicate your email address, indicate the username that you want to utilize, then you create your password, then you say register. Automatically on our system, we're notified that someone with this username and this email has registered. Then on your side, you will now need to send me a WhatsApp message to my number where you indicate your email address that you registered with, and then you also indicate the modules that you want me to give you access to. But please note, when you do this, it's not enough to register using this. This is basically to register for you to be able to create a user account. For you to be officially registered for the module, you need to send me your email address. And on your email address, I'll send you the registration form. You need to complete the registration form, then you send it back to me. The other way that you can do that as well is where on our website, you are going to be able to say, register the module on our website. When you click on the module and you say register the module, you are also going to be able to register online on our website as well, not on this platform, the other platform where you are able to get the description of the module, then you register the module as well. That's another way that you can also be able to do it online. So those are the two ways that you can be able to register. So for now, when you complete this section here, it's just for you to be able to access the material. But remember, it's limited. And for you to be officially registered with us, it's either you send the registration form to us, or you can do the online registration as well. And I'll quickly show you exactly where to do the online registration as well. So here, when you do indicate your email address, username, and password, and you place your password there as well. In future, after that, once we link you to the different courses that we have available as well, you will see that in future, you're now going to be saying login. And when you log in, you're going to be indicating your email, and you're going to be indicating your password. Then you're able to log in as well. Then once you log in, you see that it will now give you the tab for the information regarding the module as well. So it will give you the information. So it will take you to this particular page. I'll show you the page just now. So it will show you this page, and where it shows you this particular page, it will be indicating username there as well. And then it will also show you the different modules that you're registered for as well. Then if you want to access material for Rsk4805, you click on Rsk4805. Then after that, you click on curriculum so that you're able to access the curriculum. So when you click on curriculum, the first thing that you are going to see is the videos from study unit 1 to study unit 9. So the videos from study unit 1 to study unit 9 are the videos that you're going to be seeing as well. So when you want to see the videos from other study units, or if you want to go down with the different options of the material that is offered there, you click on show more sections. So when you click on show more sections there, it will give you more sections so that you're able to see the other material that is also offered on the website as well. So remember, we said when you click on there, it will give you the videos from study unit 1 to study unit 9. So once you're registered, we create a user account for you now, for those who are on the diamond package, for now, because you're going to be paying as and when, we also give you access to the material as and when. And for now, we have given you access to chapters 1, to study unit 1 and study unit 2 of the textbook. So we've given you access to study unit 1 to study unit 2 of the textbook. So you'll see that study unit 3 to 9, they're not yet available, because usually between now until sometime in April, we will be covering study unit 1 and study unit 2 as well. We should be able to cover study unit 1 and study unit 2. So for that, we are giving you that access. Then in the future, we will also be giving you access to study unit 3 to 9. But if you're on the premium package, where on the premium package, you pay your full fee upfront, and when you pay your full fee upfront, we give you everything that was done last year upfront as well. So whatever was done in 2021 and whatever was done in 2022, we give you that material upfront. So you're able to access the videos for both the study units and revision. You're able to access the revision material, where you look at the past assignments and the memos, where you look at the past question papers and the memos as well. You're going to be able to get access to all that material if you pay the premium package. Then, now, once you create a user account once you create a user account as well, after study unit 9, you are also able to download the soft copy of the textbook. So after study unit 9, you are also able to download the soft copy of the textbook. So if you click on risk management books, while it's loading there, I can just quickly check if someone made a comment. Okay, all right. And then if you click on the Google link there, you will see that this is where you're able to download the soft copy of the textbook. So if you click on download there, you're able to download the soft copy of the textbook so that you're able to utilize it as well. So you are able to access the soft copy of the textbook. And when it comes to the soft copy of the textbook, the soft copy of the textbook is also highlighted with a bit of notes on it as well. So it's also highlighted with a bit of notes on it as well. And if you go backwards, there, it takes you to where we were. Well, remember, we are now going backwards. We are now going back to the different study units as well. So it takes you backwards to the information on the study units. And then if you click on show more sections there, and you go down, you will see that it also gives you option to be able to access the revision material as well. So you are able to access the revision material, but because you're on the diamond package, we limit your access to the revision material until beginning of October. Then beginning of October, now that we are starting to prepare for the revision period, that's when we open up access to the revision material as well. So from beginning of October onwards, that's when you should be able to access the revision material. So remember, the revision material, you're able to get the question papers, the answers to the question papers, and also past assignments and the answers to the past assignments. You're also able to access the practice questions. There are three practice questions, three sets of practice questions. So there's going to be practice question 1, practice question 2, and these practice questions, they also have, I think there are about 9 or 10 questions under each practice question as well. Then there's also a video to those practice questions. There's also a memo to those practice questions that we've already compiled as well. So you're able to access it under revision material. Then over and above this as well, for each year from 2020 onwards, we will give you access to the assignments that we did and reviewed. So we'll give you videos to the assignments that we've done for 2020. And remember, the videos to the practice questions as well, as I stated, they are also here as well, because we did them in 2020. Then there's also quizzes as well, where the quiz is basically where you answer the questions on the quiz, and then it gives you a final answer to say, this question you got it right, or this question you got it wrong as well. So there's also quizzes as well that we did in 2020, because remember, because there was no past questions for 2020 group, it means that we had to compile a lot of material and a lot of medium that we're also using as well for them to be able to practice in advance as well. Then for 2021, we also have, you will see that there is also assignment videos for 2021, and you are also able to access the videos going through the Jan 2021 paper and the May June 2021 paper. And the same applies to the year 2022 as well. There is some videos where we reviewed the assignments for 2022, and then there's also videos where we went through the Jan 2022 paper, and we also went through the June 2022 paper as well. Then there's also a discussion class that we did where we were reviewing, where students were asking questions, and also I was also addressing their questions as they were doing revision as well. So we'll also make that video available so that in case it might be a relevant question to you and you're doing revision as well, you might be able to utilize it as well when we did the discussion class on the 29th of February this year as well. So we also have that video available in case you might find some questions there relevant for you when you do revision. So that's basically what you are able to access on our website. And this is the type of material that you're able to access on our website as well. Are there any questions? Any questions? All right. If there are no questions, my homework is, can you please create a user account, send me a WhatsApp indicating your user account that you, the email that you indicated on your user account, and the modules that you want to be linked for as well, so that I'm able to link you for those modules. Then please, so which means in the next class, we're going to be studying unit 1. So in the next class, we are starting with study unit 1, which means that as we are starting with study unit 1 as well, please ensure that you're able to go through the video for study unit 1. Another issue as well that I've almost forgotten is that as we go through these different study units as well, you will see that these different study units, they are labeled 2021 and 2022 at the end. So the videos that we took for year 2021, they are available, they are written 2021. The videos that we took for year 2022, they will be indicating 2022 at the end as well, which means the videos that are going to be taken for year 2023 as well, they'll be labeled after the description of this section, they'll also be labeled 2023 at the end, so that you're able to distinguish the videos from year 2021, year 2022, and year 2023 as well. All right, if there are no questions, enjoy the rest of the weekend. If there's any other questions that you will think of as well, you can send me a WhatsApp message and I'll be able to address them as well. But the most important thing is that, can you please create a user account so that I'm able to give you the access? Remember, it's free access for you between now until the 31st of March. But please try as much as possible to ensure that you are able to register officially before the 31st of March, so that you don't have any inconveniences because from the 1st of April, those who are not officially registered, we're going to eliminate. We're going to be blocking their access at the end of the day as well. All right, enjoy your weekend.
Thank you, Reynos.